You must have heard traders talk about high highs and high lows and low lows and lower highs. You would have also seen them drawing it on their charts. Many of the traders don't give much importance to highs and lows and they rarely use it in their trading. But if you ask me, it is one of the most important things for me and I almost use it every time. And why not? It gives me a clearer view of the market and helps me in my technical analysis. If you have not used highs and lows yet or don't consider it important, I insist you watch this video till the end as this video might show you the importance of highs and lows. Hey guys, welcome to Forex Monopoly. My name is Daksh and today we are gonna learn about highs and lows. Before we move forward, a like and a sub would be amazing. You must have heard this very famous saying, the trend is your friend except at the end where it bends. It is a famous saying by one of the most amazing traders, Ed Seykota. He believed that if a trader follows trend properly, he would win most of the time except at the end when a trend changes. And highs and lows play an important role in understanding trends, and it also helps us to understand when a trend is about to end and ready to bend. So let us first start by understanding what are highs and lows, how are they formed, and in the end I will tell you how to use it with your technical analysis. Whether the market moves up or it moves down, it happens because of buyers and sellers. What I meant is when there are more buyers in the market, the price moves up, and when there are more sellers in the market, the price moves down. Now, as there are millions of different buyers and sellers in any market, they all will get in and out differently as per their needs, and this will cause a temporary momentum shift in the market and cause the price to begin a correction. After the price is done correcting, it will again move up if the party dominating earlier is still in power, and this cycle will continue, causing the price to trend and create a series of highs and lows. Now let us try to understand this correctly with an example. Let us say from this level buyers jumped in. So as buyers are now more than the sellers, the price will move up. Now as the price is moving up, different buyers and sellers will get in and out at different levels. So let us say at this point a bunch of buyers got out and sellers came in. This will cause a slight momentum change and the price will move down. If now the buyers still have the control of the market, the price will start to move up, and this time it will move above this level. So this was our low from where the price moved up, and this will be the first high. And when the price retraced or corrected, it will be our higher low, as this low is higher than the previous low. And when this price moves above this level, it will create a new high. As this high is now higher than the previous one, it will be our new higher high. Also, when it again moves down and stays above this previous higher low, we will get a new higher low. And this is how the price moves most of the time. If a market is uptrending, the price creates a series of higher highs and higher lows, and if a market is downtrending, the price creates series of lower lows and lower highs. And therefore, if we are able to read the highs and lows of the market correctly, we can easily find out our entry points to ride any trend. So let us take some examples of live Forex chart to understand it correctly. Here on Euro USD daily chart, from this level, the market started an uptrend. So let this be our low. Now when the price moves up and then corrects and moves above it, this will be our high, this will be our higher low, as this low is higher than the previous one. Now As the price moved above this high, this will be the new higher high and a new higher low. And you can see in an uptrending market, the price is creating continuous higher highs and higher lows. So the price moves in the same way until it bends. And when it bends, the price again gives us an indication that the trend has changed or is changing. You just need to observe the price. Many of you guys might be using trend lines to spot if the price is changing the trend or not. But I still think using highs and lows along with patterns and trend lines take you on a whole different level. It gives you clarity, and with clarity comes confidence. Moving forward, how to spot if the trend is about to bend or a momentum shift has happened. Let's quickly jump to the previous uptrend example to understand this. Let's assume at this point sellers jumped in and the price created a new high low. But this time the price could not move above the previous high and it stayed at the same level or even below that level, and then moved below the higher low, that is this level, and created a new low which would be a new lower low. When something like this happens, it tells us that there has been a momentum change in the market and the trend is ready to bend. Let us move to the chart and see if this thing really works. If you look at this pair, the market was trending up and creating continuous higher highs and higher lows. But at this point, the price could not create any new higher high, as this was the last higher high and the price created a higher low, but then the price could not move above and dropped below the higher low and hence created a new lower low, telling us that there has been a momentum shift. And you can see after this the price started to move down and created lower lows and lower highs. Again, if you look at this simple and short downtrend, here the price was creating a series of lower lows and lower highs. At this level, it created a final lower low and then the price moved above the previous lower high and created a higher high, indicating that there has been a momentum shift and then the market started to move up. I believe price tells you everything. You just have to observe carefully.